During the financial crisis of 2008, we were severely impacted by that decline in the markets.
We lost 30% of the value of our assets, which at the time meant that we went from $10 billion to $7 billion in asset value.
If that same decline occurred today, that would be equal to about a $4 billion decline in asset value, just because the portfolio today is worth more than it was going into that.
Because we had invested so successfully prior to that time, however, we still did not have to reduce benefits that we were paying to clergy or reduce the amount of benefits that we were promising our clergy going forward.
Other investment firms were obviously impacted by that environment as well. In fact, basically all institutional investors lost meaningful assets during those declines. There was really few places you could go as an investor to avoid declines in that environment.
Of course, coming out of the last financial crisis, we know that it is not going to be the last financial crisis. We have to have a high degree of confidence that we're going to be able to weather those crises, and that our participants are going to have confidence that they're going to have the benefits that we've promised them. One of the ways that we do that is we go through what we call a stress testing exercise. We run 10,000 different scenarios of different market possibilities, inflation possibilities, and look at those outcomes and say, based on the odds, what is the likelihood with this amount of assets today that we're going to be able to weather a variety of different conditions in the market out into the decades. We've had a high degree of confidence that the assets that we have today, managed in the way that we're managing them today, will be sufficient to see us through those rainy days.
Today the portfolio is actually worth quite a bit more than it was going into the decline in 2008. We stayed with our long-term investment program that we had in place, and so we recovered as the markets recovered, so that worked out well in the long term.
And we're prepared as a church pension fund. We make sure that we have a cushion of assets above our current liabilities to see us through those turbulent times in the market, where we know that we will have a high degree of confidence, even with a significant decline, that we are going to be able to pay benefits to our participants.